Regional banks, bouncing back, at least their share prices this morning. Pressure, of course, this week. The market's been focused on credit quality, and there have been some concerns about that. We've gotten a slew of earnings as well this morning that seem to be providing some relief, including Huntington Bank shares reporting a better than expected quarter. And upbeat guidance. Steve Steinauer joins us now to discuss. The stock is up 1.5%. But, Steve, let me just start on the question I'm sure you've been getting from many of your investors as well in terms of how you view your own credit risk right now. Worries about collateral integrity and things of that nature. When you look at your assets, are you comfortable where things stand?
David, good morning. Great to be with you again. We're very comfortable with where we are. We put an aggregate moderate to low risk appetite in place 15 years ago. We've operated under that ever since. We've just had consistently great results. Charge-offs this quarter were 22 basis points. Non-performers were reduced. Delinquency reduced. We're in really solid position. And as we look forward, because of the controls that we have in place, the diversification, how we manage the portfolios, we're quite confident in our portfolio. And
when you look at some of your competitors or these broader concerns that have seemingly come to the fore in the last 48 hours, I don't know. I'm curious as to how you think about them, whether you think there's anything systemic or whether this is something that will pass very quickly.
Well, I've been in role here for 16 years, so I know most of my peers at these institutions. The banks, the regional banks that are broadly diversified, and that's almost all of them now, are really well managed, in my opinion, and these are one-offs. And you heard a couple of CEOs mention these as one-offs. I don't think they're systemic. I think the banks have done a really good job as a whole post the great financial recession of diversifying risk and managing it much better. So I think a lot more risk that used to be in the system is now out of the system, and over time we'll see the banks perform reasonably well. Of course, there'll be one-offs from time to time.
Sure.
Okay, well, that's reassuring and good. I mean, broadly speaking, so credit looks good. How does consumer look? How does small business look? How does lending look?
Yeah. So we're optimistic about our loan growth. We're having very high 8+% loan growth for the year, and we expect to continue that going forward. In terms of the consumer, it's always been a tale of two worlds. Low, moderate income consumers are feeling the stress from the tariffs, I should say, from inflation generally, and that is not changing, and there's no reason to think that will change until inflation is reduced further. I'm optimistic that'll be the case as we go forward, but the balance of the consumers are in great shape, and certainly our portfolio is performing exceptionally well.
I mean, you raised the 2025 net interest income guidance. What sort of assumptions are you making there on deposits and on rates?
Well, we've raised it again. We've had peer-leading deposit growth. We have peer-leading loan growth, for that matter, and the same on the fees. So on literally all cylinders, we're firing well. And the deposit side, because the Fed has decreased short-term interest rates, they've taken one turn. They've alluded to another downdraft later this month. That is repricing deposits, those that are variable rate, in line with the change in interest rates. So that's actually widening our net interest margin, a couple of basis points, literally with every reduction.
Stock hasn't done much this year. Our viewers are taking a look now at 3 months down 8%, but basically relatively flat over the last year versus obviously the larger cap banks, many of which have seen significant moves up in their stock price. Is that a frustration to you? And what do you tell your investor base at this point in terms of what you expect from the share price?
Well, we were clearly up significantly until fairly recently, when there's been a move to sort of sort the banking portfolios between buyers and potential sellers. We are closing Monday on a combination with Veritex, so we're on the buy side. So there's a fear that we will continue to buy and dilute our shareholder base. Absent that, the performance for the year was quite solid, going back now, I think, for the first 6-7 months of the year. So that will sort out. We're very focused on driving our core growth. We're having exceptional growth again this year, so that's 3 years in a row. We've increased out guidance each quarter this year, and we're very confident going into next year about continued growth. So it will catch up. There are moments in time where the market gets a bit dislocated, and then it sorts out. We'll be a winner.
Are you continuing to shop around? You know, the regulatory environment is very different this time around, and there is an expectation that we'll see more bank deals, either as a buyer or a seller.
Right. Well, the regulatory environment for banks and for other industries has changed very significantly. The Veritex combination that will close Monday is significant. But unlike our peers, we have invested very significantly over the last few years. We've expanded into North and South Carolina. We've opened a handful of branches this year. There'll be a couple of dozen next year, a couple of dozen beyond that. We've opened now, in the last year and a half, 8 specialty banking groups nationally. We have a lot of organic growth. And we see Texas now with the Veritex combination as a springboard. We've got great new colleagues, terrific leadership with Malcolm Holland coming in as our chair in Texas. And we got a lot of organic opportunity. We don't have to do anything else. In my 16 years as CEO, there have been 3, so we're not an acquisition machine. And we're looking, we're always open to continued partnerships, but the primary goal of the company is to drive organic growth, as we've been doing now for a number of years.
Stephen, always appreciate it. Thank you for taking the time this morning.
Thanks, David.
Especially today.
Especially today.
As some of these banks bounce back.